Welcome back to Crystal Ball. My guest is Aakash Prakash, the Chief Executive Officer and Fund Manager at Amansara Capital. Well, Aakash, now really questions in India. And let me start where we left off. You know, if commodity prices are going to be largely bearish or largely stable at current levels, then do you think that there is a goodish bit of space for the Reserve Bank to cut rates? What are you factoring in?
Yeah, I think Reserve Bank will cut in 2015. I think it's quite likely. I mean, I would say it's very high probability. Whether it's Feb or March, frankly, I don't want to comment. I think what Mr. Rajan is doing is right, which is that he wants to be 100% sure that he has really broken the back of inflation and it's not cyclical. Because I think the concern he will have, obviously, is that, you know, has enough been done on the supply side for him to be confident that this is a permanent decline in inflation, right? Because you may argue that food prices, what has really been done, the APMC Act issues are still there. The big gap between farm to fork, you know, the big price, the price being eaten up by middlemen. Have they done enough to incentivize supply and clean up the bottlenecks and change the procurement and the whole? There are a lot of policy issues around agriculture and farming which I don't think have been fully addressed. So I think that is obviously, I think, what's partly holding him back. Plus the fact that the government does still have a fiscal issue. I mean, they've got some space, but you know, 4.1 is going to be a very challenging target, I think, for this year if they can hit it, and we'll see next year. So I think he will cut. I think maybe slightly later than what people expect. But I think he seems determined that when he does, it will be quite significant. I think he made statements to the effect saying that when we do cut, it will be deep and it will be significant and stuff like that. So in calendar 2015, I think very high probability. Sometime in the first half, I would say high probability. And when it cuts, I wouldn't be surprised if it's 50 basis points at a time when he does finally do the cut.
Okay. Well, before I come to the question of, therefore, how will stock prices move, you know, the press makes it out that there is a deep rancor between the Reserve Bank and the Finance Ministry. Do you think if for some reason, this is extremely speculative, if for some reason Rajan were to leave, will the financial markets take it very badly?
Yes, unambiguously.
Okay.
I think Dr. Rajan has tremendous credibility internationally. I think he's highly respected by policymakers and investors globally. I think he's a very good governor of the Reserve Bank, and I think people have tremendous regard for him, and people I feel that he's done a great job till now. So if for some reason he were to be pushed out, and I would assume it will be pushed out, but I don't see a reason why he would on his own. I think it will be unambiguous negative for the financial market among global investors for sure.
No, I'm sure there is nothing like that afoot, but the manner in which.
I have no idea, but hopefully you're wrong. But I'm just saying, but to answer your question straight, I think it's an unambiguous negative.
Okay. Well, let me come to how the markets themselves are perceiving the government. How are you perceiving? Are you happy with the way it has only been ordinances, and for a large part of the first 6 months, the Prime Minister was visiting international capitals rather than state capitals? How would you assess his record?
Yeah, I think it's better than people think, in the sense that there was some disappointment on my part as well initially when we all thought that, you know, he was next Margaret Thatcher. He would, Mr. Modi, the Prime Minister, would come in and, you know, do a slew of reforms in the first one or 2 months. Maybe that was naivety on my part or on our part, that, you know, obviously India is a far more complex political animal, you know, than we recognize. And I think they also, the fact that the BJP and the party had not been in power for, you know, more than 10 years. So I think they also took some time to kind of come to speed with the challenges and how to get back into government and run. I think in the last couple of months, I think they've shown determination. I think the ordinances are a positive, because it gives them a clear signal that we're not going to tolerate disruption for the sake of disruption. And I think some of the stuff that they're talking about in terms of pushing things, pushing stuff through, is a positive. So I think people should have less doubt on their determination to get things done. I think they still need to use the budget in 2015 Feb to give a really clear, concrete game plan that over the next 3 to 4 years, this is what we're going to do. This is why the economy slowed, ABCD, and these are the 4 things we're going to do. And not like 20, just give 4 or 5 steps saying these are the 4 or 5 things we need to do: improve public expenditure, whatever things, clean up the the farm, supply side, stuff like that. I think there's still some lack of a concrete economic game plan, which investors can hold on to and kind of judge the government. But my own view is that they are on the right track. They are doing a lot of stuff. They're clearly showing more determination now. I think they recognize that they've been elected because of a development mandate, and they need to deliver on that. So I'm positive. I don't think that's going to short circuit the India story.
Okay. Well, let me come to the question which investors will really want to hear from you. You've done 31% in 2014. Realistically, how much can indices do in 2015? And if you want even a 24-month horizon?
No, I think the scope for multiple expansion now I think is limited. I mean, you would argue that interest rates going down will improve multiples, but Indian multiples aren't. So maybe there's some scope for multiple expansion with interest rates coming down, but not dramatic. So it's going to be an earnings growth story from here. India in the first stage of which is standard. The first stage of the markets go up, multiple expansion, earnings growth will catch up. So we're now in the earnings growth phase. So it really depends on earnings, how strong you see earnings growth. I mean, I think earnings growth in India over the next 2 to 3 years will be quite strong. I think Indian earnings growth will get back to 20% plus because you're coming off a low base with the economy accelerating, with rupee at 63, 65, whatever it is, with oil commodity prices down. I think the earnings growth will be strong. So I think over the next 2 to 3 years, India will compound at 15 or 20%. I think which is really what my view of earnings growth will be. I'm making an assumption that multiples will hold. Because interest rates are coming down, they may not expand. The bulls will argue that multiples will expand. I said, don't assume that. Assume multiples hold. Earnings growth over the next 2 to 3 years will be 15 or 20%. So the market should compound at that. I think that's a realistic estimate to make. Now, there could be front-end loaded. You could have 1 year of 35%, the next 1 year of no growth. Or it could be zero growth this year and 30% next year. I mean, that you can't...
What's the probability?
Of what?
Of zero this year or flat this year and
no, I think
35.
I personally feel it'll be front-end loaded.
Okay.
So that if the budget is a strong budget this year in terms of structural reform, giving a concrete game plan, investors gaining further confidence that this government is serious about moving ahead, I think the market performance will be front-end loaded. So you'll have a stronger year than people think if they deliver on these things I'm talking about.
So how should an investor prepare? What may be the leaders if this rally were indeed front-loaded?
I mean, it's tough to say because we are very stock specific, so we don't really look at sectors or stuff like that. So I wouldn't want to hazard a guess on that. But I think the obvious, like if you look back to 18 months ago, there were obvious divergences in market valuation, right? The mid caps had massively underperformed, and now they've caught up a lot. So there could be some more juice left in the mid cap side because if domestic investors lead the rally as I expect them, then they would tend to naturally buy medium sized companies. But that valuation gap is narrowed dramatically, so it won't be as big a divergence this year. I think this year mid caps up like 50%,
yes.
and markets 30%, something like that. So it won't be that broad a gap, but it'll be. I think mid caps will continue leading it. Second big divergence 18 months ago was economically sensitive stocks and sectors. There was a huge gap between the so-called defensives and the so-called economically sensitive. Even that has narrowed significantly, but there's still some space there left. So I think the trend of the last 12 months, which is that mid caps, economically sensitive stocks, and quality defined in terms of governance, return on capital, balance sheet. I think these three things will continue being the drivers of what stocks do well.
Okay. There is one theme which some brokerages have put out. Far from being a Margaret Thatcher, Mr. Modi runs public sector well. He did that in Gujarat. And even now, the one sector he has taken, Coal India, for the longest time was giving 3 to 5% annual returns. This year has already given 10% return. So is public a theme that you will look at?
It could be a fascinating trade if they genuinely take the path of reform of banks, which is reform the governance structure, reform the selection of management personnel, and enable them into the market-based compensation type of talent, etc., etc. Because they are you could argue arguably cheap. I mean, there's debate how cheap they are because of asset quality, but if they're untethered from the government interference and control, that could be a very interesting trade. But the reality is, I do not yet have a view or feel confident enough to say that the government will actually let go of enough control and give them enough freedom that you can make a bet on that. So the banks could be interesting, but we have to see what the government really does. Do they really adopt the Nayak Committee report? I've read the Nayak Committee report. I think it's an excellent report done by Dr. Nayak, which is very sensible in its recommendations. If the government adopts them, I think PSU banks are a very interesting trade. If the government doesn't adopt them, I wouldn't buy PSU banks. So it's almost binary in that point of view. Other public sector companies, of course, yes. I mean, we look at Coal India, we look at BHL, but those are stock specific. I mean, you look at the specific situation there. Okay. The big broad trade is PSU banks, and that really is binary. If you believe they adopt Nayak Committee, I think it's a very interesting bet.
Okay. In cyclicals, when will you see the inflection point? I mean, I spoke to
actually on the ground.
Yes, on the ground. I spoke to a couple of India Inc. heavyweights, Tata Steel, Larsen. They are not looking at growth for the next 5 quarters. So, which part, cyclicals, do you only play financials or would you play, materials, capital goods?
Yeah, no, I think capital goods, obviously, you know, I mean, whoever you spoke to, I think they're right. Probably 12, 18 months is when you actually start seeing on the ground. But the reality, these stocks are an order flow. So, you know, so one is that, first of all, the obvious truth is the financials, because, you know, they're going to have to, if the economy revives, obviously they get improvements on asset quality, interest rates are going down, loan growth comes back, and you can argue that's an easy way to play an economic recovery and industrial. So that's obviously one trade, which we are playing, I think everyone is doing. But I think the cap goods also can be interesting. There are some early cycle cap goods you can get into because they trade on order flow, not on actual earnings. So, but, you know, but there you, obviously a leap of faith. I don't think you'll see any significant improvement on actual earnings for another 12 months. But you should start seeing order flow improvement in the next 6 to 9. Okay. So, you know, so there is some scope there. But, you know, there are very few good quality companies in that space. So I wouldn't play the developers. I think they have very serious balance sheet issues, which are almost intractable in nature. So I wouldn't play that. There are some high quality cap good companies, maybe 2 or 3, which are early cycle. You can play some of them. But the banks are the easiest way to play it.
Okay. Actually, well, why don't you summarize that for me? I know you don't invest in that fashion, but if somebody asked you to invest 100 rupees, how would the sectoral breakup be?
That's a tough one. I don't know. I would say, I mean, it's very stock specific, but, you know, I would have a large chunk in the banks. I think that's an obvious one which we've maintained for a long time. I would have a large chunk in consumer discretionary stocks. Okay. So whether it be autos or white goods or stuff like that, because I think there again, as consumer confidence comes back, you know, as interest rates start going down, as confidence comes back, you'll see a pickup. And they're coming off low base. Most of these things have not grown for the last 2 to 3 years, and, you know, and long-term trends are 10-15% growth. So I would have, these are 2 big chunks. I still like IT. I think, I know IT is going through short-term pain right now, but you know, I believe the rupee will continue to depreciate slowly and systematically over the next 12, 18 months or next 2 to 3 years. And I think the IT stocks are not that expensive. Most of them are, you know, 13, 14 times. These are some of the medium-sized ones.
Yes.
So I would say these are 3 big sectors we would own a lot of. And then we have small, you know, we own something in pharma, we own something in, you know, all the place. All
right. Akash, thank you very much for joining us, taking time off your holiday and doing some crystal ball gazing for us.
Thank you so much.